Today we want to talk about GameStop because the price is trying to squeeze again. You can see today on our SpotGamma charts that it started around 180 a share and broke as high as 220, but then tailed off a little bit at the end of the day, still a great 20+% move. As you can see on our chart, we have two key levels here. They are the put wall and the hedge wall. Both of those levels are telling us that there is large open interest at the 200 strike. Now, most of the gamma is down at 170, but the key to gamma lies in what we call the pivot. If we look at our equity hub volatility estimate, you can see that there are two shaded areas around this 200 strike. On the right, we have green, which implies that the stock is under control of call gamma if it breaks the 200 level. So the fact that the stock closed over this level and was showing upward momentum here in the 210 area is telling us that call options are now really starting to influence the name. If it was going to break below 200, we would see put options and put gamma a little bit more in control. So the fact that the name has broken the 200 level and is starting to squeeze a little bit higher may be a sign that dealers need to start buying the stock to hedge. Now, if you look at open interest, you can see that 37% of this gamma position expires on Friday. However, earnings are on June 8th, so it's likely that a lot of option traders are going to be looking to play that date. And what has happened today is that options have become very, very expensive. Looking at the options activity today, you can see there was a lot of volume. It all outsized open interest, which tells us this is likely new trading activity. You can see in particular the 370 strike was very active with 17,000 calls trading. Now, if we switch this view to look at implied vol, you can see just how expensive these options are. An implied vol in the 2 or 300s indicates that these are very expensive options. And what's happened is market makers are very quick to raise the prices of call options after the January 21 gamma squeeze. So to deter people from buying calls, they raise the implied volatility or the cost of the call option. A more expensive option does two things. One, it dissuades new call buyers, but two, it actually incents people to sell calls, right? There are a lot of people who may be interested in trying to capture these very expensive call options. And when they sell calls, they help market makers to get long calls. And that helps to offset the delta exposure, but it also gives market makers what's called convexity. And convexity means that if the price of GameStop explodes higher, say $100 in a single session, the market makers own call options, which will help to hedge out their tail risk. The other thing about the price of these options is they're just expensive from a notional value. You can see that the 210 call, which expires in 3 days, is $13 per contract, which is roughly $1,300. So this prices out much of us retail traders. It's just a very expensive ticket. What may be a more interesting trade is the ability to sell put options. Implied volatility is very high for puts, obviously, as well. And if you sell a put, and if the stock goes up, the put likely loses value. So that's good if you sold that put. The other thing that's interesting is if the stock declines, implied volatility should also decline, which means that put could actually lose some value. So it's possible that if the stock goes down and you sold a put, you could actually come out ahead. It's an interesting way to play the trade also from a squeeze perspective, because if you sell puts, that could mean that market makers who would then be long puts will look to buy stock as a hedge. Now, this is not a trade recommendation. Please do your own research and due diligence before investing any money. We hope you found this video helpful. If you found this SpotGamma data interesting, you can hit subscribe now and get a free 5-day trial of our Equity Hub product. You can also reach out to us at SpotGamma on Twitter. And of course, leave any comments you have in the box below, and we will be sure to get right back to you.